Hi all, this is a weekly catch-up on our trading strategy we've been explaining and going through, and some of the little strategies, tips that you can take into next week's trading plan. So what we'll do is we'll do a quick recap on the last 4 trades. The first trade being the New Zealand dollar US dollar. I've taken this back 2 weeks just to highlight the trading strategy and how, if you have confidence in your trading, it can perform very well. What I've done is highlighted the chart just to over exaggerate the moves in the pairs. If we look here then on a Friday, we've taken the previous day's high, previous day's low and marked it onto the Monday chart. And we've continued that trend all the way through. You can see here on the Monday it broke through, it retraced as expected, as we want it to, and then a further move to the upside. Again, Tuesday we saw the same pattern, a breakthrough of previous day's high, a pullback, and then a continued move up. And this theme, this pattern, has continued basically for the last 2 weeks. A few points to note. One is we've put an equidistant channel in at the start of the move here from 2 weeks ago, just to highlight really the move up and how even this sideways movement with a slight dip is still within a range bounding uptrend. If we look at the bigger picture, we can also see the New Zealand dollar, US dollar was moving down, a retracement moving down, and now this could be seen as retracement, or we could be seeing a further move to the upside in line with a declining dollar in the new year. But that's a long way off. We go back to the hourly chart. What we can see here then is just a play on pips really, is if you'd have started the Monday here, I know this is a perfect scenario, but just as an example, if you'd have started here at the start of the week and your stop loss was the previous day's low, if you had have left the trade, you'd have got your 20-30 pips clear to see. If you'd have left your stop loss at the bottom here, you will see you will never ever hit the stop loss. You don't even go near it. Likewise, if you had moved your stop loss up each day, and I can put a line in to show you this. Here's your stop loss on Monday. You didn't hit it. Stop loss on Tuesday, we didn't hit it. Wednesday, we didn't hit it. Thursday, we didn't hit it. Friday, Monday. It wasn't until the Tuesday here that you hit the stop loss if you'd have been bringing it all the way up from day one. And if that was the case, then you would have got nearly 90 pips on that one move by using that same strategy. If you'd have left the stop loss here from day one and left the trade to where it is now, you'd be 150 pips up. So these are good trading strategies on trending markets and holding your nerve, and that's a lot to be said in trading. If we look for Monday now, we can see this is Friday. I've marked off Friday's high, Friday's low. Monday is we wait for the trade to set up, and then we can decide on the remaining move for the week. Last point to note is 90% of the time I find that whatever happens on a Monday, Tuesday normally sets a trend for the week. So if we're an uptrend here, for the rest of the week we're in an uptrend. Here, likewise, we started going down, more or less sideways, and it was only the last 2 days we moved to the upside. Swiss franc yen, same again. I've highlighted the key low on the Friday, key high, and I've put an equidistant channel in so you can see the market was slowly grinding sideways. But again, we can see if we broke and put our stop loss down here around 40 pips, At no point did we hit that stop loss, and you could still potentially be in trade on 130 odd pips. Likewise, if you'd have continued the stop loss up each day, so here's Monday, here's Tuesday, Wednesday, Thursday. Okay, Thursday, on a Friday we broke Thursday. So you would still, if you'd have started here and you broke it on a Friday, it'd still be 13, 14 pips in profit. That's saying if you didn't take your profit. If you'd have let the stop loss right at the start from day one, over a 2-week period, you can see that gradual build. So this is a trading plan or strategy that you can do daily, you can do weekly, or you can do for long term. And sometimes some of our trading plans are long term and they have huge stop losses purely based on a strategy. And they do come into fruition, but sometimes they can take a while. If we look at the euro yen then, we can see here I've marked charts differently to show different setups. On a Monday, we can see that if you'd have put this level here as your stop loss, basically for nearly 2 weeks the market didn't hit your stop loss and we moved sideways, and at any point you would have been in profit all the way here. But again, Monday to Friday we can see the main trajectory was a downwards trend. And likewise, we don't like to keep trades open at weekend unless we're very confident that the market direction is still going, in this case, downwards. And on the Monday, we can see where our stop loss was set for, sorry, not our stop loss, our low, okay, of the day on the Friday. And we can see we were bouncing off this low. We didn't break it, so obviously we didn't continue the downtrend. And then on the Tuesday, we would have broken Monday's high, and we basically continued grinding all the way up. So we've marked this as an uptrend for the week. So another way of marking the chart, another way of looking overall. So if you were trading a weekly candle or daily or an hourly. The last one is the dollar CAD. Now, the dollar CAD, we've been going off quite a while about a long-term downtrend. We're still in this trend. We've been in and out of it. But I'm just highlighting here where the trades can change. But again, I'm going to highlight the problems or corrections you can face. So here's Friday's low. And then we've got Friday's high here. We can see that Monday we didn't change anything. Tuesday, if I put in now Tuesday's high, we can see where the market broke through, pulled back. According to our rules, we would have been in this trade because we don't know what's going on here, and our stop loss would have been the previous day's low, which is here. So 34 pips. Okay, the market went up. We would have been expecting it to continue as per our trading strategy, but the market didn't. It continued lower, and it would have broken the stop loss. On the Wednesday then, we can see where the market would have broken our stop loss, because this is Tuesday's low. Although we have to remember, it broke our stop loss, it pulled back, and now there's a new trade set up. So you can get in a short here, and although you lost 35-40 pips on these couple of days, if you'd have shorted the market here, well, we can clearly see 123 pips. If you'd have wanted to get your pips back, there's ample time. Also, what I'd like to show here is the market fell. We had a retracement here. So if you had got in at the start of the week and was using your previous day as your stop loss, then your stop loss is at this level and you got it here. So your stop loss in this trade is roughly 20 pips, and at no point the market has broke the stop loss. 120 odd pips all the way down to 11, 12 pips, and then all the way back to where it is at the moment, 110 pips. So again, if the market hasn't broken your stop loss, you're still in a trade. The trade's still valid. This could just be a retracement prior to a retest, prior to a big fall. And this is where we see the dollar CAD. We like this trade, and we think this is going to be a long-term fall. We're actually in the trade. We can see here the fall, the pullback, the fall, the pullback. If we look at the bigger picture, we'd like to see that this is your lower high, your lower high, your lower high, and now we need to break for a lower low as a lower low here. So let's see what Monday brings. But overall, guys, what you need to take from this is mark your previous day's low, mark your previous day's high. Normally the markets are quiet on the Monday, so basically sit in your hands, see what happens on the Monday, and then 9 times out of 10, like I say, the trade direction is set up for the week. Here, you can have a couple of bad days trading, but if you stick to these rules, you will get your pips back and more, and potentially you can be in a long-term trade, just moving your stop loss up each day for the week, and then making that decision on a Friday night, do you want to keep that trade open or not? Just being aware that we can have gaps in the market that can jump your stop loss. Some gaps can be in your favour, some gaps can't be. So it's really your decision. Unless you're in profit by 100 pips plus, I would tend to close on a Friday and reevaluate the following week. Hopefully this has helped, and next week you can apply the strategy we've been going through for the last week and start seeing some profitable trades coming in. Any questions or comments, just let us know, and if you can, like our videos.